The collateral crisis is noticeable here today. And I want to point this out for everyone that is doubtful that a collateral crisis is coming with the hedge funds, and specifically the hedge funds in AMC short positions. Now, how this works and what we've talked about. Well, Apple, Microsoft, Google, Amazon, your large tech stocks are seen as some of the safest collateral that you could give. The odds of their earnings falling off a cliff or these companies going through hard times when they all have like 50 billion or more in cash, it's not going to happen, right? So during the summer of 2022, you've seen a lot of proposed rule changes coming out due to what happened in 2021 to try to limit the risk and a contagion if hedge funds were to go bankrupt because they were placing low value collateral to back their short positions. Think about what happened in 2021. They made those rules in 2022 to try to prevent that from happening. Now, in those rules, there was one specifically that made it so you can only pledge high quality collateral, AA or AAA rated assets. That could be bonds, or government bonds more specifically. That could be bonds with companies such as Apple, these stocks that I just mentioned, or these stocks themselves could be pledged as collateral. Now, when those stocks decrease in value and hedge funds have millions of dollars pledged and put these stocks up to fund their AMC short positions, instead of paying out cash, that's what they're doing, in my personal opinion, by and large. Well, you can see this relationship specifically when stocks like Apple start to fall. AMC stock recently has been rising, and I think it's no coincidence. This is not happening off of news. This is purely price action moves. And to be honest with you guys, this is not someone that's saying, hey, AMC's falling, let's pledge more collateral to AMC and let's use more Apple stock. No, that's not how this is working. It's set up through algorithms. So if AMC goes higher, right, or if Apple or some of these large tech stocks drop, it automatically goes to pledge more collateral so they don't get margin called, they don't get forced out of a position that they are unaware about. It's done with algorithms. Now, when I say a credit crisis or collateral crisis, I might use both of those terms throughout this video. I mean, if Apple stock or Microsoft stock or Nvidia stock or any of these other large players start to fall, it could add a lot more bullish pressure to AMC. We've seen this recently, and I want to point out this example for you guys of what's currently happening right now, so everyone can notice this, right? Apple is falling, AMC rising. This is no coincidence. Now, we'll talk about this more throughout this video, but that is the rundown that I'm going to give you guys for now. Now, something else I want to focus on, because we're talking collateral crisis. So what is going to cause stocks like Apple to fall? Well, like I said, they're very stable businesses, right? Well, this week you have a lot of important things happening. So first things first, today, you actually seen this. It's a tweet from Nick Timiraos, and he is what a lot of people think a Fed whisperer. He gets tweets or emails from the Fed to deliver messages to the markets without the Fed having to come out and give you kind of those breaking news headlines, right? They like to do this more so to kind of soften the burden. That's like if you're about to give someone bad news, you might beat around the bush for a minute. Right, that's kind of what the Fed does with Nick Timiraos. He tweeted 2 hours ago, quote, "Until now, the Fed has been looking for clearer signs of a slowdown and easing inflation to justify a pause. But after this week, the calculations could flip. Officials could need to see signs of stronger than expected demand and inflation to keep hiking." So, it doesn't look like you're seeing a pause. This doesn't look like you might see a pause, right? So, yeah, it's not a good thing. Not necessarily a good thing what he said there. Now, I do want to take a look at this as well. Because let's highlight one fact. The markets have been going higher not because earnings have been getting better, not because you're expecting another great year of earnings. Earnings have been very bad. Intel just reported their worst quarter in their business history. Intel's been around for a long time. It is because multiple expansion. The markets are currently pricing in about 2 percentage points, 2% of rate cuts by the end of 2023. It's called multiple expansion. The amount of money people are willing to pay for earnings is going higher. That's because people are expecting Fed interest rates to go lower by the end of this year. If that does not happen and we start to get inclinations that we're not going to get rate cuts, maybe the Fed is right. Maybe the Fed's saying they're not going to cut rates at all in 2023 is the right move. Well, that is what will cause these stocks to fall, because after all, Apple, Facebook, Nvidia, Tesla, Microsoft, Google, Amazon, they're not cheap. Not at all. They're very expensive. And I personally think they're in a bubble based off of this perceived multiple expansion and the perceived rate cuts that the Fed is going to give us. So number one, that is important. That is what could cause these stocks to fall. Now, a couple quotes coming out from some analysts, and this is from Evercore specifically. It says, quote, the Fed pause on May 3rd, whose rumor has been priced by the SPX / the VIX collapse, will be, quote, sell the news, given inflation remains a problem and the SPX 4,200 ceiling collides with the debt ceiling, said the team at Evercore. Quote, a hawkish pause, decelerating economy, and cautious debt ceiling debate drives volatility and results in rotation back to prior defensive leaders, all of which outperformed in April, they said, noting that they like healthcare and staples here. And just as the Fed is pausing, investors should be doing the same, owing to higher risk around the debt ceiling debate that's showing up via ever higher U.S. sovereign CD prices and a year spread between 1 and 3 month treasury bills, they said. They aren't, though. Because until equity markets begin to notice, it's unlikely politicians will feel compelled to act. Political brinksmanship will fuel market volatility. The VIX trades to 40 in 2023. SPX retests the 3,800 floor. The similarities to 2011, where arguably Democrats and Republicans were more reasonable than in 2023, are striking, says Emmanuel and the team. The big date to watch for equities may be May 2nd, when Evercore points out marked the S&P 500 peak and VIX trough of 2011. So they're saying tomorrow is going to be a very big day to watch in regards to this debt ceiling crisis because of the similarities you've seen in 2011, where the VIX basically bottomed out, meaning the markets topped out on May 2nd, 2011, and then subsequently started to fall from there. Now, let's go ahead and take a look at that and see if we could pull that up to kind of make sure we're giving you guys the right information here, because I did not double check that. I just kind of went off of what they were saying. Let's go ahead and see exactly what's going on. Okay, so sure as shit, May 2nd, 2011 was the peak. And then you started to drift down, and then you ultimately got the debt ceiling fears right about here. And that did cause a drop of roughly from that peak of May 2nd, we'll go ahead and point that out right there, to the lows of about 21.5%. And tomorrow could be an important day. We'll see what happens. Now, all of this is important to AMC in regards to the collateral crisis, because it's pretty clear that Apple specifically and other tech stocks, when they fall, AMC has been tending to rise. AMC stock is hitting a high of a day currently as we are filming this video, up 1.73%. It's been negative most of the day. It was really negative right here around the 12 time, and I believe this is military time, I'm not sure, when Apple was hitting the highs of the day. AMC was hitting the lows of the day. Now Apple's starting to come down, pretty aggressive candles right here. AMC stock getting some aggressive candles to the upside. So I don't think there's any debate there. So, but the question is, when does the markets actually fall, and when is this collateral crisis come to a boiling point? Well, it might be when we get new news coming from the courts. That is a very real possibility, because once that happens, I mean, the stock's probably going to go much higher from here. I think it's safe to say that you're not going to get a judge that comes out and says this settlement is fair, that we're in a unanimous agreement that this settlement should go through. I doubt that is going to be the case, and that is kind of how the markets are expecting this to play out. Now, as we went over earlier in the video today, the only real news you got today and only real data you got today was ISM manufacturing PMI. You were expecting that to come in at 46.5%. It came in at 47.1, or it's not percent, it's just a number. 46.5% was the forecast. It came in at 47.1%. But more importantly, it's the prices paid. Came in at 53.2. You were expecting a reading of 50, so much hotter than expectations. And that's literally prices paid for new orders. That means inflation probably going to continue to go higher here. And if you look at inflation on a 3-month chart, it is going higher. So the market's perception of Fed pause coming might be wrong, unless you start to see massive, demand concerns and bad economic data coming. Maybe that could justify the Fed pausing here. Or if they give you a hawkish pause, if they say, well, things aren't looking so good in the economy, but inflation's running too hot, we got to see how the data comes out, we could still raise, or we might pause. If they say something like that coming May 3rd, that's not going to be a good thing whatsoever at all. Now, we will report on this as well. Going to kind of switch gears here. We'll report on the earnings today and after hours, specifically from NXP. NXP is going to be a massive player when it comes down to Apple earnings, because they do supply Apple. Let's go ahead, see if we can. It says NXP software for Apple CarPlay. The software provides a smarter way to use an iPhone or other iOS device in the car, including systems targeted for OEM and aftermarket systems. This software is offered through NXP Professional Services. So it looks like they got the CarPlay. So some of the actual software there is supplied by NXP Semiconductors. And that is why NXP earnings and after hours will be so important. Because if NXP don't do good, Apple's probably not going to do good. And Apple is 10% of the NASDAQ and 7% of the S&P. Apple earnings this week are a major event in which, if Apple does fall, that collateral crisis, that collateral requirement to be in these short positions with AMC is going to be that much more relevant, right? And let me just be clear for everyone out there. Apple is a stock that hedge funds, almost all of them, have to own. Well, why is that? Why is Apple the stock that I keep picking on here? And why is Apple the one that could really fuel a lot of this collateral crisis? Well, Apple is the markets. Apple is 11% of the NASDAQ. It is 7% of the S&P 500. You have not seen a drop or a rally in 2023 or 2022 or 2021 that did not involve Apple. It's just a fact. It's too large of a market weighting. If Apple goes up 10%, the NASDAQ goes up 1%. If Apple drops 10%, the NASDAQ drops 1%. Considering the S&P 500 is up less than 8% for 2023, you can see how important Apple is. Apple is up almost 30% in 2023. It's carried a lot of the weight. So hedge funds, they have to own Apple, because if you're a hedge fund, you're supposed to do better in the bad years and you're supposed to do decent in the good years, right? The point of investing in a hedge fund is where if the markets drop 20% and you go through a bad year, a hedge fund in theory is supposed to hedge that out. They're supposed to be able to give you positive returns during down years or make those down years not so down. We obviously didn't see that happen in 2022, but that's how hedge funds are supposed to work. So if you're a hedge fund, you can't underperform the markets by a large degree in good years. You just can't. So if you don't want to own all of these names that I have mentioned in this video, you just at least have to own Apple. And you can't own the other names and not own Apple, because Apple has such a large weighting of this market. And that's why I think Apple is highly collateralized with AMC stock. And that's why I think the collateral crisis is likely to get worse from here. Apple did hit a key level today. Oh my gosh. Apple. Apple is at $169.65 per share. Do you see the key level Apple hit today? 170. They hit a high of 170.45. They've really been fighting around 170 for most of the day today. Now let's go ahead and pull up a horizontal line so we can give you this actual reference here. That's 170. You peaked out all morning there, got rejected there, seen a big candle, got rejected there, fell all the way to 168.64, came back up, hit the 170, went above for a while, and now you're back under 170. This could be the highest that Apple gets in the near term. Depends what happens tomorrow, depends what happens with Apple earnings, obviously with the Fed. But I don't think it's going to get much better from here. Apple is already overextended and I would say is in a bubble. Does it get better from here? It's hard to make that case. And just like Evercore points out, tomorrow is going to be a very important day because it also marks the high of 2011 before the debt ceiling crisis actually played out. So hey, that's what I got for you guys in this video. What do you think? Collateral crisis or not? Is this coming? Has it started? Who knows? Let me know your comments down below in the comment section. Thank you guys for watching. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video as well. Thank you guys for watching, and I will see you in the next one.